Yeah, so some of the things that we're going to go over today is from a 40-year trading grandmaster, which is kind of cool, right? And this gentleman has gone through basically 40 years of statistical backtesting of the marketplace. And again, this is like a little bit more advanced concepts, but I think, hey, so maybe you guys are ready for this. So let me get started right here. Give me just one more second, and we will dive right in. Here we go.
Hey, Kate, can I share a
Sure,
suggestion?
sure, sure, sure.
It's becoming unclear what the passwords are for these sessions and a little bit hard to find it. So, I mean, we only have a few people on the call right now. You might want to consider, even publishing like the password more clearly to people because there used to be a lot more, right? Now there's only like 6 people on, and I'm sure there's probably others that are trying to get on, but they can't find it.
Yeah, there is instructions on the Patreon. But yeah, maybe I could do, well, what's the best way to do this? Because it's like changing it every month kind of helps. But it's always in the same spot, if you know what I mean. Like if you find it once, it's always going to be there.
Well, I'm just
So
saying though, I mean, there used to be like, 20 to 30 people who were calling in, and now there's like 6 people, right? So
yeah, yeah.
it doesn't seem like I'm sure there's others that are wanting to get on and they probably can't.
Yeah, they'll trickle in as they come. Um, we'll, I guess we'll figure it
All right,
out.
okay, just a
Yeah,
suggestion.
yeah, no, I agree with you 100%. But again, it's I'm man, scaling and figuring out the technical logistics. That's like a whole nother thing to think about. But maybe we could find a stock that focuses on that stuff and make our lives easier, huh? Just kidding.
Well, I mean, the thing to do would be to have you have a list of your subscribers, right?
Like an email, you're kind of saying?
Yeah, just send out a weekly email that here's the link with the password embedded in that. That's what
Y-
I would do.
Yeah, yeah, I definitely could. We'll see. We'll see what ways to make it better. Let's dive
Okay, all
into the
right. Anyways,
markets.
just thought it was hope all is well.
Yep, yep. Nope. All is well. Diving into the markets today, guys. Man, I do want to get a little bit more technical today. So, I mean, if that works for you guys, but you let me know. If it's too much, then we could go something else. But just a quick recap here, right? Now, I know markets have been pretty difficult, as you may say, with the market dip and stuff. But what I have right here on the screen, you see right here, Meta, Microsoft, Apple, Amazon, Google, Tesla, Nvidia. Basically, this is the indicator, right? It's a stack of indicators that we're using. And you can see right here, oh, well, I zoomed out already, but you can see right here, we just started turning teal, right? And then also this candlestick right here is turning teal. So even this indicator, right, leveraging like other trading grandmasters and what they think about the marketplace, even when I have the Magnificent Seven in here, right, those seven stocks in here, the signal to go long doesn't really come in until later. So I started thinking about this weekend, right? Going back to like just the markets and all. If we look at the S&P 500, like are there ways for us to identify, a better, timelier way of like getting in or playing the dip, right? Because markets can get tough at times. Again, we kind of forecasted sort of like the turnaround, the pullback, but I think where we failed in the next forecast was like anticipating how much of a bounce this would be, right? Because one is like we're approaching negative seasonality. Again, the seasonality stuff is just like a baseline understanding of like what markets have a tendency to do. You can use that as a baseline to kind of figure out, okay, what could happen on top, if that makes sense. That's actually what data scientists do. If you ever look into the practice of a data scientist, they actually get into building models, and those models act as like a baseline. And then from there, they do a technique called fine tuning to better tune to whatever application or statistical analysis that they're doing, right? So the baseline that we do have is that we know that August, September are historically have a tendency to perform badly. Now we did get a sell down, as you see right here in August, right? We forecasted that well, I would say. But I think the part where I felt like I could have done a lot better was like, okay, like how do we capture this portion right here, right? This was it was how do I say this? Like if you go back and you look at all the other, years and stuff, I guess you would say, man, what we saw in like the last 30 days was incredible, right? We saw 60 days, about 60 days. we saw like, well, yeah, you could say 30 days, 30 to 60 days. We saw like quite a bit of selling action, right? It came down pretty hard. And then next thing you know, it goes to a certain point and then such a big rally, and this rally continues. And it's just like, okay, how do you capture this whole thing, or how do you know if it's this is the spot for reversal, right? And so as I'm thinking about what I know, I feel that the reversal, me analyzing reversals, I think that's a weak point for me. Like I could identify trends and momentum breakouts and stuff like that, a stock that goes on and on for a while, and what environments are really good. But how do you identify these really great reversal points, right? And so one of the things that I posted in the FinViz Club school thing, basically this right here. Uh, if you guys recall, I posted, I mean, I did my explanation in here, but I do want to explain it again because I think it's actually a powerful technique. So we go into the FinViz school platform over here. The one that I talked about is just how to identify a bounce right here, right? And it's pretty fascinating because I think we can use this moving into the future for, any scenarios where the markets pull back heavily, like as we saw over the past 30 days over here. So if you take a look at this, right, I know I got a lot of things going on my chart, but if we just use the volume profile right here, right, like there's a lot of activity right there. And so, and again, I could fix the chart as well. Let me go actually fix the chart. So if I fix the chart and I move it to here, right, you still, even if I remove the trading action that you have over here, you still see quite a bit of action right here, right? And so you know that this is an area where things could bounce. And as we go into where we are today, that's exactly what happened. So I'm just thinking like, okay, is there a way to, you know, look at use this into other stocks, not just the S&P 500. This actually works pretty universally, I would say. So if you look at it, right, we had the most amount of activity right here at this price point, right there. And when the markets dip down, right, the A, B, C, right? I mean, it's not perfect, right? This is where it basically landed. And then it reversed. Now, when it reversed, is there a way for us to get in? There's also like, one is like trading it to the downside and then spotting a place where it could potentially hold and then come down, right? So I was looking at the 100 MA and thinking that this could be a scenario, but that scenario didn't play out. Instead, it continues to rally. So how do you maintain buying or swing trading in a rally like this? I think what I came to conclusion is probably utilizing a trend line. As simple as it sounds like, I think a trend line might be the most effective method, right? So let's draw what I'm talking about right here. So what I have right here in the blue, right, is the volume profile or the horizontal volume, you could say. Basically, it shows the volume of where activity happens at the highest activity happening at what price, right? It's saying what price versus what time. Because, when it comes to vertical volume right here, it shows you when did the activity happen on what day, what time did it happen, when did it happen, versus this one over here, it shows where did it happen, right? And so when we know that we have our when and where, right? We have our X and Y axis, right? So when and where did it happen? And then boom, you got your coordinates right there. So that's why this is quite powerful to align it with volume profile, right? So we knew that going in that this area right here where I'm basically, making it really messy, right? That was like a high activity area. And so prior high activity area should have, just as high activity. So when the markets came rolling down right here, right? So round right here, we were up 19%. S&P 500, again, the S&P 500, when we say the market, the S&P 500 is the market, right? It was up 19, approximately, 18.9 or 18.87% or whatever year to date. And we knew we were approaching negative seasonality. And it was coming down, and it did the ABC sell-off, right? So A, B, C. So if you remember the Elliott wave theory, right? It's 1, 2, 3, 4, 5, A, B, C. Uh, hold on. Did I get that right? I need to look at my notes again. Again, if we apply some theory, right? Elliott wave theory. Oh, a little bit of lag right there. There we go. Uh, the way the markets move, right? Because again, this is what some of the market practitioners were utilizing to kind of figure out where the market is moving next. So let's pull up if you guys recall. So the markets, right, tend to move in. This is more of an advanced concept, by the way. The markets tend to move in these different motive or moves, you could say, right? So the first part, the 1, 2, 3, 4, 5, is the impulsive move, and we kind of had that 1, 2, 3, 4, 5, and then once it gets into correction mode, the way it corrects is A, B, C, right? And so we kind of had that in the S&P 500. I know you can't see it here, but let's just say back here you got the 1, 2, 3. I forgot this one. 4. Wait, 4, 5. Oh, that's messing up my drawing. So let's say this was the 5, right? This was 5 right here, and then this would be A, B, C, right? And C landed right onto the high volume area, and then the markets bounce up very sharply. Now, okay, I know it's getting very messy. You guys are probably lost, but I'm trying to apply some theory here, right? We're getting a little bit more advanced. So, is there a way? I was thinking, what tool am I looking for? Let me pull this. Is there a way to identify this? Let's just erase this and do it one more time. So, I'm thinking there is, right? One is, let's say we found that the markets would bounce right here, and when it bounced right here, it did. The moment it bounces, I think the rule is 2 points make a trend line, right? And so this is point one. You might have not gotten this one, right? Maybe that one would have invalidated, but you got this point right here, right? You probably won't get it down all the way. But I'm thinking like if we just slap on a trend line, which is there's a trend line that you see right here, and the rule is as long as it's still within this trend line, we remain long. If that's the case, we would have been able to capture this move pretty well, right? Because now the markets have rallied to the 50 MA. So that's a tough one, right? This is definitely a tough one. This is not, majority of the time the markets are trending, but I was just thinking like, critically, like how do I capture something like this more effectively, right? So I don't know. Um, Maybe you can send a link in school. Tech is good. Okay, sorry. I think that was comments from previously. But yeah, that's what I'm thinking about, guys. Now we currently right now we if we capture where we are, we're still in this tight, buying pressure right here. You could say. Uh, as long as we remain in that, right? It's showing like some sort of buyer is still in control, or a group of buyers is still in control. Now we might break that, of course, right? You have to anticipate that, but it's pretty tight. It's pretty tight buying action, and we could zoom in to make it a little bit more clear. But as long as we maintain this, I mean, we could push up a little bit more. It's getting a little bit overbought. We're gonna probably pull back to the 50 MA. So that's what I see the general market doing. This is why we look at the S&P 500. You guys see what I mean? So yeah. So let's look at the other markets, right? Because now that we have like a general consensus of like what the markets are doing, we could then look into stocks. And if you guys have stocks, let me know what you want to look at. Because I actually want to apply or show you some new techniques or ways to think about things, right? We're going to use this gentleman's pretty. We're gonna use a technique from a 40-year plus trading grandmaster who actually went out there and did statistical analysis of the markets for very extensive periods, right? And then see if those techniques, what we could learn about it for our entries and exits when it comes to trading. So that's what I wanted to do today. But if you guys have stocks that you want me to talk about, we definitely can. If not, we'll cover the usual ones. Bernard says, "I've got an interesting one." Sure, let's take it. Let's hear what you got.
Let me just turn the mic off. So, it's interesting if you go back in time and look what happened to Okta, right,
Mm-hmm.
where they were hacked about 2 years ago,
Mm-hmm.
and how they've had a gradual improvement, right, or
Yeah.
since then. But compare that to even a more significant hack at CrowdStrike, right,
Mm-hmm.
which appears to be recovering even faster,
Mm-hmm.
which is really fascinating to me.
Mm-hmm. Mm-hmm.
So, is there likely to be a full return to CrowdStrike back to where it was on its original trajectory in about 6 months to a year from now? And I think the answer is yes.
6 months to a year. Ooh.
Yeah, I'm
Uh,
predicting by the end of the calendar year, the stock will be back up to where it was.
yeah. You know what's funny? Like, as I was spending my entire day yesterday, like just kind of studying the markets, I actually looked into such I would say not event-driven pattern, but it's similar to what you're describing, right? Like what's happening with the hack with CrowdStrike and stuff. That's like one thing. But what I was actually looking at was like, okay, there's a concept out there called overhead supply, and this is a little bit more advanced. But basically, we'll pull up Netflix and I'll show you what I mean. Because what I did yesterday was I was analyzing all the beaten down stocks that were down 60% and still hanging down there, right? So stocks like, at one point Netflix was beaten down this much right here. Okta's beaten down 60% plus. I got the list in my notebook over here somewhere. Let me see. Let me pull up my notebook. Do I have it? Let me see. Yeah, well, we got quite a bit, right? So Alibaba's down 80%, PayPal's down 80%, Netflix was down 70%, Atlassian down 70%, Nvidia was down 50% at one point, Boeing down 75%, right? So there's a concept called overhead supply. And basically what it is you see this red portion right here, Bernard? This is the, climatic selling event that happened in 2022. And climactic selling versus climatic buying, that's pretty awesome stuff. It's what we want to get in because that's where you can make your riches like very quickly, right? So climactic selling followed by overhead supply, rally right here. So something like a CrowdStrike, who recently experienced a negative event that, the message hit globally, if you think about it, right? Everyone in the world essentially felt it. And so that resulted in climatic selling. So what follows climactic selling is slow buying that takes actually longer to get back up to where it was. So climactic selling, this happened in like what? This is the monthly chart, by the way, for Netflix. It happened in I mean, what you can count from here, but let's say 1, 2, 3, 4, about 4 months of climactic selling. And then look at how long it took for it to recover. This is like, half a year, 1 year, and a year, say 2 years. It takes a stock about 2 years to recover. And you could apply this to like other ones too. Like I think MongoDB, same thing, right? Again, this is great analysis, by the way, because we're analyzing like what happened in the past and all that. So MongoDB over here, I mean, this one's not even fully. I mean, you say we had climatic selling in 2022 over here, but still it tried to rally, prematurely, but then now it failed, right? So maybe not a good example. Maybe we could pull up actually maybe Nvidia, right? We go a little bit backwards and understand this. Again, what I'm trying to explain to you is this concept of like overhead supply, right? So here's Nvidia right here, and how long would it take to recover? Actually, maybe it was this one right here. This one recovered actually pretty quickly, but was there another period? Here's another period right here, right? So something to think about. I know this goes all the way back for when Nvidia was 80 cents. Now, okay, we know why it's 80 cents, right? It's called stock splitting, so it wasn't 80 cents. But just kind of imagine the gravity of this, right? The financial gravity. I mean, it went from like 90 cents all the way to 30 cents. That's pretty big move for Nvidia. Now the price at the time it probably would have been like 500 or whatever, right? But imagine, so take a look at this. So one year, right? This is 1 year, 2008 to 2009, climatic selling in one whole year. That was a whole year. Imagine, okay, you gotta really think about it. I know we're just looking at a screen like, like about an inch right here. That's a year, but you gotta really think how long is a year? So a whole year of selling, and then 1, 2, 3. This one took a while because this one was a Great Recession, or recession. 1, 2, 3, 4, 5, like 5 years before it kind of like got out of the base, and then you see, oh, the effects of overhead supply right here. The whole point of overhead supply is it's basically, I wouldn't say it's a theory, but it's actually like because you have people who were experiencing this climatic sell-off, they become bag holders, right? And so as the stock is trying to come back, it's facing massive overhead supply. So that's what we need to think about when if we're trying to be cheap, this is why my mantra is don't be cheap. When you are being cheap, you're targeting stocks that are beaten down like Okta like this. And you will pay for being cheap because you will pay with overhead supply. In other words, like you have this overhead supply of people who are bag holders right here of Okta, and any chance it goes up, they're going to try and sell off. And so the whole premise of overhead supply, and it applies to all situations that I'm seeing, but every situation is a little bit different, right? So this is climatic selling right here, right? And then overhead supply looks something like this, where it will take like, climatic selling could be less than 1 year of selling, and then overhead recovery could take 2 to 5 years, right? Or let's do 1 to 5 years, or 1 to 3 years, depending on how severe. 1 to 3, let's just do 1 to 5 years. So you see what I mean? So the essential pattern is like the stock could rally like crazy, climatic sell off, and then overhead, rally, overhead supply rally. Literally, it'll take years to get back to where it was. So the question is, there's a trading regime here, which is like you could short, and in this part, now if you play this part, that's long-term investing right there because you're going to face a lot of overhead supply. This is why my mantra is don't be cheap, right? Because I would love to buy it once it hit all-time high, because once you hit all-time highs, you clear the overhead supply. Now there's no more bag holders. Everyone that's ever bought this stock is in the green. And so the market is in major discovery mode and it could go a lot higher. Sorry, I mean I get really passionate about this topic because it's like this is where the money's at, right? The money is in not being cheap. If you're trying to be cheap, then you're buying beat up stocks and you're facing a massive amount of overhead supply. It's a valuable lesson here, right? But that's yeah, it's such a fascinating topic. Like, but do you see what I mean, Bernard? Like, I know your thesis is that CrowdStrike could potentially recover very quickly, but what we need to understand is that there are bag holders now, right? And we don't know if this climatic selling, this is like the first leg down. What we saw previously, climatic selling could happen in like a whole year. So it could be just like a rip your face off bear market rally in that case, all right?
Well, if you need the crystal ball, right?
Yeah,
But I think the answer really is that you in your portfolio of stocks you have a certain percentage geared to stocks that are on a kind of rebound trajectory, right? You wouldn't put all your money in a CrowdStrike or any stock, but if you put like 10% of your equity in these type of potential return back to where they were stocks, if you get lucky, even if you get wrong 2 out of 10, if you get right on the other eight, you'll do really well.
yeah. So, I mean, I'm definitely looking at this one right here, right? Because this one's down 80%, but then the way I'm thinking about it is like, if I'm gonna play options on this, it's got to be leaps. Like I got to do like 2 to 3 years out or something. Like even 1 year out might be a little risky, right? Because again, PayPal climatic selling, and it's already like about 2 years now of like just hanging out at this massive volume, horizontal volume area right here, right? Like it looks juicy, and it will recover, in my opinion, right? Down 85%, but it's no means of like you jump into it now thinking like, oh, it could go up like in your favor right away. It's gonna take some time. And same thing with Okta, right? I think Okta is a perfect example right now of like climactic selling followed by overhead supply rally, right? This is like, look at that. I mean, oh my gosh, that's exactly what we're talking about right there. Um, let me. Oh,
Do you mind if I respectfully disagree?
sure. No. This is
So
how we learn.
PayPal, I mean, how often do you really use it? I mean, it
Uh,
seems like Venmo and Zelle and all these others have eliminated the need for using PayPal between people. And on websites and that, I'm seeing almost never using PayPal. I mean, other than eBay, which is sort of, you can't survive on one, but
yeah,
just seems to be losing its ground on being all that significant.
yeah. So you could say that, right? But I'm looking at the sales right here. Sales is at the end of the day, sales is what proves significance, right? And the amount of sales is 29 billion. That is no small entity, Bernard. That is an insanely impactful entity, and it's been showing 2019 to 2023. It's existed like the way PayPal operates is that it exists behind the scenes of like what like it's almost taking a position of like whatever you spend on the internet, they take a cut. So it's invisible to the consumer eye. So you might be looking at it from a consumer perspective, but if you look at sales right here and shares outstanding, big players are gobbling up these shares right now. They're taking the shares dilution down, right? Shares outstanding is coming down. Like I'm seeing really bullish signals right here.
Huh.
And then the amount of money, like this is not tiny economics. Like come on, like software companies, like I don't know, like Snowflake, right? Snowflake got 1 billion in sales, or CrowdStrike. Let's pull up CrowdStrike. PayPal is 29 billion in sales. You gotta understand the numbers here. They're very significant. So CrowdStrike right here is only 3 billion, 3 billion in sales versus like PayPal, right? So the way I see it is because it's doing about 29 billion in sales, it's structural to the global economy and it's showing that it's been going up. So that's where I would disagree back and say, look at the sales. it's not you're don't I wouldn't look at the consumer front. I would look at the sales. But again, this is great. I mean, I'll take any any disagreement feedback because this is how we learn together, right? Because maybe Bernard's seeing a data point that I'm not seeing. So this speaks loudly right here, like way too loud, right? I mean, the value of this right here. I mean, we're talking about okay. If I look, we gotta now position ourselves as like a pension fund or a mutual fund manager or some hedge fund manager managing billions of dollars, right? And I'm looking at this, and this thing's a $29 billion entity, and I see that they're doing some corporate restructuring, and the shares are, there's less shares, so demand obviously should increase, and the price to sales multiple is 2x, right? And they're doing 29 billion and 30 billion in sales almost, and it's been going up over the years. So it's basically like internet transaction. It's like transaction roads of the internet, basically. Um, Sales have been going up, but the price has gone down. So again, the technicals is different from what I just said, right? The technicals is like overhead supply is what you're going to anticipate because you have all these bag holders right here who want to get out, and the stock won't really rocket until it goes to all-time highs. But Bernard, did that change your perspective in any way? Like just looking
Well,
at
it
the
depends. I
sales?
mean, it's possible, right? I just personally don't really see PayPal as much as I used to, right? When COVID hit, a lot of people were doing more online stuff, so PayPal was more active. But I mean, now, I mean, yeah, they got a lot of sales, but the growth doesn't seem to be there anymore. So it seems to be losing its overall momentum.
Yeah.
But I could be wrong. I'm happy to be wrong.
Yeah. I would just say look at the sales. If we talk about sales growth, then yeah, probably the sales growth is like, quarter over quarter is only like 8%. So it's not a high flying, fast growing stock. The way I would perceive this now is it's kind of like real estate, internet real estate, right? Where they're doing 29 billion, almost 30 billion in sales, where it's like infrastructure to the internet, and it's hard for it to disappear. And so if the governments were to print money, then something like this is essentially a blue chip. A blue chip like this could go from like 69 billion to 100 billion because fund managers have to basically, they have to perform, and so rising more money printing or more money in the system causes sea levels to rise, and so these asset prices will catch a bid. Is what sort of my thesis right there. Now, if you want to go and understand, PayPal a little bit more, right? We're doing a little bit of a fundamental analysis over here. We go in here. Um, Again, and a lot of the times, like this stock won't catch the media's attention until the price is like way too high, right? But that's just how it works. Let me see if I can find anything real quick here to kind of better help you understand how they make money, because I would love to understand that as well. It's always good to understand how they make money. So let's see. Okay, so they're a platform, right? Let's zoom in on this. So this is their TPV. I don't know what TPV stands for. Total purchasing volume, total purchase volume probably. But let me see if I could verify that real quick. Accounts and activity metrics. Uh, so year-over-year growth in terms of like monthly active accounts, right? 3%. Branded accounts. So this is how they make money. So Venmo is a portion, but let me see if I get a better visibility. Uh, do they break down revenue, strong quarter, Q&A. Wait. Accounts and activity metrics, TPV revenue take, P2P, right? Because we got to understand the entity and how it makes its money, hedging impacts. But then, this analysis could take a second. Total payment volume. So TPV is total payment volume right here. Okay. So let's go back to that picture. This one right here. Wait. Okay, so TPV. So they're a payment platform, right? If you're thinking about eBay, let's see, current prior year period, prior quarter, current quarter. Let's do the year, right? Percentage of total, eBay's is 2%. Their biggest one, where they make the bulk of their money, is these two right here. Branded checkout and then unbranded card processing. Unbranded card processing, PSP. Is that what they call it? Venmo's 18%. So this is the vast majority of where they make their money. So the question is, if you're focusing on like, I don't see eBay being popular. That's only 2%. So the vast majority is branded checkout. So in other words, when someone's buying something on the internet off of like a Shopify website or just like not a non-Amazon.com website, then the payment might be PayPal, right? Unbranded card processing. I don't know what this one is, but unbranded card processing, we could look into that because that's a big portion right there, 30% of total. And then Venmo is kind of, Venmo is kind of, we already know that one, right? P2P is X Venmo. I don't know what that one is, but I want to look at unbranded card processing. What does that mean? Unbranded card processing. So let's see, right? PayPal makes unbranded checkout. What is PayPal's unbranded processing? Unbranded payment services means when you interact with and making payments to partners and merchants using our card processing services that do not carry the PayPal brand, or when you use our Braintree or Zetto services. So it's sort of like invisible, right? So it's something that this is more of an abstraction, like a financial abstraction. You won't purposefully, consumers won't see PayPal. It's not a consumer brand. This is enterprise. This is more like B2B. It's more like payment infrastructure at this point. Now, again, does it just because like I'm saying all these things like 29 billion in sales at this valuation doesn't mean it's bullish. It's only bullish when you see in the markets, and when we see the markets, we look at the charts. When the charts are bullish, that means the market's bullish, or the market for PayPal. So it's not bullish yet, but this is how we analyze, right? Again, it's not, it comes down to your strategy, what you're willing to do. If you want to do something longer term, then yeah, like something 80% down like this, you could try, but you're going to be fighting overhead supply, just like Okta, right? So that's again, we just dissected the revenue of PayPal and how they made money. But let's take a look at some of the other stocks, right? So again, this is why I don't know if we covered this yet, but this is essentially that overhead supply, and the way it looks like is basically you get a sharp decline, right? Climatic selling, and then over a period of years and years, you get like very crunchy buying that just takes a while, right? Until one day it finally clears its highs, and then you start to see the rhythm of the markets kick in. So that's the only, it's just how it works. We saw this with Netflix as well. Netflix is about to clear all-time highs, in which case, if it clears that all-time highs, it's going to be a big runner, right? So this one, yes, it's down, Okta's down 70% plus or whichever, but you're gonna have this crunchy buying behavior for some time because it needs to offload these bag holders in there during the climactic selling. So Netflix, we pull up Netflix right here. We pull up Netflix and we go to the monthly chart, right? And these are powerful case studies that we can see. So look at that, right? I without a doubt, like Netflix is about to be a fat runner. Okay, I mean, again, this is not investment advice. This is just from my, understanding the markets thus far. But essentially, climatic selling, right? That happened in a period of less than a year, and then very crunchy buying, as you see right here, crunchy buying. Then the moment we clear 700, sky's the limit. This thing could be a big runner, right? It's just that's just how the markets work. You could say that with this area right here, right? We broke out right here, ran, broke out right here, ran, but then failed, and then big dip, right? So that's called Bukowski. He calls that a busted pattern. So, in my journey of becoming more, I don't know, I love this game. Like this is like the best game on the planet, right? So I'm trying to level up this year. I mean, I think every year, right? I'm still running 5 miles, right? Just not 6, 7 days a week anymore. I'm still running it. I'm still going to the gym. It's just some things that you just got to keep going. So I also want to apply that sort of discipline to the trading and learning as well. So what I want to do next is actually look at NVIDIA right here and show you folks like, okay, like we talk a lot about like catching trends and stuff like that, and that's when the markets are in a really good environment. But then what happens when volatility kicks in? Are there ways to trade high volatility moments, right? So the in order to do that, well, I was sitting at the cafe trying to figure out like, all right, what other trades could I structure? Because essentially you can make money like 24/7 if you structure it right, right? Because there are 1 day trades, there's like 1 week trades, there's 1 month swing trades, and then 1 month plus whatever, right? So like 6 months to 1 year. So essentially, there's different strategies at different time frame. Now, daily is a lot harder for a lot of people. Weekly, I mean, I think that's a standard, right? Where we meet every week. So yeah, I think there's a trade for everyone. Well, like, in other words, there are trades that everyone in here could structure around their schedule. So like if you're a busy professional, yes, like swing trading, you could totally structure that like to work for you. And if you're super busy, you have no time, you don't want to look at the markets at all, you could essentially do leaps with options as well, right? Do long-term related stuff. So that's something that it's just we always have to clarify. But let's take a look at this chart and let's give you guys some analysis of like how Bukowski, leveraging his statistical analysis, could help us in understanding the price action of NVIDIA, right? So the first thing that I talked about today is the power of this, horizontal volume or volume profile is what they call it, right? Check it out. So again, like what I say is basically like, is there a way for us to identify when a market sells off, right? Because for one thing, like I think we could identify trends, right? And trends kind of keep going. But what happens when it goes into pullback mode? We don't know like where in the pullback will it land to, right? Will it bounce to? So one way to do that, I've now realized, is to leverage this right here, right? Okay, I should say I now realize I kind of knew this, but basically look at where it came down to. It came down literally on that point right there. So you know that this is a powerful tool to have to identify how far can a stock pull back for if you want to play reversals, right? But now, how do you identify reversals? So we're gonna have to start drawing trend lines, and one of the rules that we have to stick to, as let's say this is the standard rule for every market technician, is that 2 points make a trend line. So I didn't draw this. I let the machine draw this, right? So that's 2 points right there, and then here's 2 points right here, and we have a trend line right there, right? So what does that basically mean? That means like we're approaching resistance right here on Nvidia soon, in which case that could cause us to go back down, or we could break out right here and move higher. So we know pivotal moments coming up, and again it comes down to your risk tolerance as a person. Like you might be like, oh, there's still a little bit more I could trade to the upside, and you do like a quick trade up here, right, and then you get out. And you just play the channel, right? Or you could play the reversal and you expect it to go down right here, or you could play the breakout where it goes up here and it trades higher. But essentially, what we have right here is a nice statistical pattern. Well, a pattern that Bukowski has done a statistical analysis on. So I'm going to introduce you to some of the more advanced techniques that I'm going to be leveraging moving forward. And I've also added this link into our school platform link as well. So if you go to the school platform right here, right, you go into resources. All the tools I use are in here, and then basically I added number 6 right here because I do use this quite a bit, and it's a very powerful website, right? So if you go into the website right here, Bukowski's website, you could go down and look for basically the picture index, right? So I click on picture index, and it basically gets me to this page, right? So again, the introduction is that he's someone who's been trading for 40 plus years and did very intensive statistical analysis on chart patterns and candlesticks and everything. And he's put together like a great. It's like I own all his books basically. I have those books. I'll flip around. I was flipping around all day yesterday. It was so fun. But basically, it's like these fat encyclopedia books of like different scenarios, right? And I was thinking like it'd be a fun journey for like maybe the rest of my life. We understand all these different statistical patterns that he's identified and how we could, come up with trading conclusions related to whatever stock situations moving forward, essentially. So going back to the NVIDIA picture, right? So the pattern that we identify right here, and I probably have to redraw this because it's getting really messy. So what we're going to focus on is where will NVIDIA go next, right? We might be hyper focused on one stock today, but that's okay. This is market analysis or technical analysis, but we're going to be analyzing this pattern right here. This pattern right here is called a descending wedge, broadening wedge, or broadening wedge descending. So what I do is, all right, I mean, I drew out the pattern, so I'm guessing you can see it right here. But essentially, this is the pattern right here, right? Descending, broadening wedge, and it'll move in a certain formation. And if we understand that, we can understand that, what potential trades come next, right? Um, okay, let's go to the website right here. So we go in here and we look for it, right? So these are all the different scenarios. It's a lot, but you gotta be a little bit of a geek to kind of understand this. So we're gonna go down and we're gonna look for it, right? And I already did the sort of like the analysis, and I think it's pretty darn good. So this is the pattern right here, right? You go in here and you do command find, and you can do not command find, command find. You can do broadening wedge right there, right? You go in here and you see that there's 6 different types of broadening wedge patterns that exist in the marketplace. But if we go down, the one I want is this one right here because it fits what we're talking about. So now we know that NVIDIA is currently going through a descending broadening wedge formation, right? And this gentleman, again, he did the statistical analysis on it, which gives you the breakdown of like what's the possibility of like what could happen here, right? So you can see the overall rank in performance. This one ranks 27 out of 39. Break-even failure rate for up or down breakouts, 18% up, 35% down. That's the failure rate. So this one has more success to the upside. So break-even failure rate for up and down. So yeah, more failure rate on the downside than the upside. So it suggested that this is a bullish setup, right? But it has to meet the criteria. So what else? Average rise is 39% versus average decline is 13%. So on average, the stock will rise. Average rise is 39%. No, well, that doesn't sound right. Well, 39% of the measure move. So this one you got to explain a little bit. We got to explain a little bit more. Throwback pullback rate 62%, 64%. But you see what I mean? He actually really did the statistical analysis on 757 cases out there for when this situation occurred. Again, we're backing up the analysis with real numbers here, which makes this analysis very effective. Um, Now, the price trend, right, the characteristic of this pattern that we're going to analyze to figure out where NVIDIA goes next and potential trades that we can come out of it is it can be up or down leading to the pattern. So in other words, you could have like it could be in other words, it could be leading up like this, or it could be leading down, right? And then into the descending broadening wedge. Taking a closer look. So for let's see, both trend lines slope downwards. Yes, they both are sloping downwards. We can confirm that. And then touches for proper identification, look at least 5 trend line touches. We'll skip this one. But this is the part right here that was really interesting. So if you wanted to trade this, right? And these are some interesting points right here. For upward breakouts, use the highest peak A, right, as a target. So this is if we come out of this trend line right here, then the target profit would be A right there. You see what I mean? So we go back to NVIDIA, and I'm going to clean this up, right? So again, the whole point of this is we practice this so that we could apply it to like other stocks. So this is the descending broadening wedge. Again, this is a lot more sophisticated topic. So the target would be right here at 140, right? So if we were to break out, go to 140. We go 140, we go 140, over 140, then it's going to be really bullish, right? So that could be a scenario. Now, another scenario is we hit resistance and we go down, which is also discussed here, right? So he talks about ways to trade this. So if you can identify the descending broadening wedge, right? One, you could sell short at one because it's a retest of that line, or you could buy 3 and 2. You buy the dip at 3 and 2, but you have to learn how to sell, right? If it goes down further, you have to have risk management rules as well. But short the top of one, he says, right? So okay, well yeah, you short the top at one when price heads down, and then you cover at two. You short here, you cover here, right? Or you buy at three. I'm guessing you buy at three, and then you sell at one maybe, right? But that's how you play these sort of these setups. Now, how do you draw it? Again, you could let the machine draw it, or you stick to the rule of like a trend line requires 2 points. 2 points make a trend line, if that makes sense. Um, Motorola G Stylus, dang, that's interesting characters in here. Sorry, I was just looking at the participant list. But okay, it is what it is. What do you guys think of this information? Is it a little bit too technical? Like we're actually getting a little bit more advanced here, right? I'm kind of easing it in with you guys, but it's again, there's so many traders and investors or folks out there that play different ways out there, right? But now we want to approach it with a little bit more statistical backing. And we could read into this and understand like, how it all works and what happens if like the pattern fails, et cetera, right? So, but that's essentially one way to look at it because this is the setup that the markets are currently giving us, right? So again, descending broadening wedge, and it played out well. But then you wouldn't have the second trend. Realistically, it would have looked like this right here, right? But then okay, this is actually really good. Hold on. This is actually really good right here. So this point is only recent, right? So if I were to draw it again, it probably, let's say I drew that one right there. So we did fail right here. We failed, we came back in. Now, when a pattern fails, it actually becomes the reverse. Then that would have been flip long, right? And so therefore we would have caught that. But let's say now that you're in, how do you manage this position now that you know what formation you're in? You're in position, because I was thinking about this yesterday as well. If we're in position, where do I get out? Draw a trend line like this. And the moment it comes out of this trend line, just get out. That's your stop, right? Now, other points is you also have to keep increasing your risk management, right? It could be the 50-day moving average, or it could be the next candle. So let's say it goes up a little bit more right here, then your next risk point is this candle. You always got to move it up if you want to keep your profits. Again, this is just like, great principles to practice on. Um, but yeah, that's NVIDIA right there, right? Uh, this is different from market environment. I hope you guys kind of see this. V says makes a lot of sense because pattern behavior, in my opinion, represents past psychological behavior, which we know is pretty consistent. Yeah, I mean, if you come in here long enough, I mean, what we were just analyzing earlier was just basically the pattern, the repeatable rhythm of climatic selling followed by overhead supply of buying, right? That's a pretty common pattern, and we could probably apply that. We could apply another one. Look at this. This is Cloudflare right here. That's the same pattern or the same rhythm that we were talking about earlier, right? I know folks were trickling in over here, but basically we're talking about climatic selling, follows by choppy, crunchy overhead supply buying, right? So in other words, it's like climatic selling and then crunch, 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 and this crunch buying could take like 1 to 2 to 3 to 5 years for it to come back to all-time highs before it starts running again. That's just the nature of stocks, right? So these descending broadening wedge, again, we'll apply it more as we go. But let's see how else could Bukowski help us, right? So let's look at this one right here. Let's actually apply his teachings and use Cloudflare, because Cloudflare is a top enterprise software company out there. Again, if believe it or not, like if you saw my notebook, like I have a notebook, right? And there's just like so many strategies that could come into the marketplace. Like it's wild that you folks come in here, but you'll hear me talk about things like, event-based strategies, right? Which is like earnings or some sort of catalyst like CrowdStrike hack or IPO pop or news of like FDA approval or mergers and acquisition or dividend announcements. That's only event-driven strategies. Then there's like technical-based strategies, which is like kind of like what we're talking about right here, which is like, momentum trading, reversals or flags or channels or wedges or mean reversions. Then there's like corporate-based strategies, right? Which is like share dilutions or leadership changes or insider transactions or debt issuance and repayments. Then there's like fundamental based strategies, which we were talking about with Bernard earlier about PayPal, right? Where it's like, hey, let's dissect its revenue, let's understand how the company makes money, and then we kind of see like it's sort of coming from like this spectrum of revenue, et cetera, et cetera. And then we analyze like the revenue growth, right? So there's a lot like this is one of the most complex chess games on the planet. I don't know how I could individually help like everyone understand all the strategies, but just understand that there's a lot of strategies out there, and it's about you finding what fits for you. And I could try to fit your parameters. But yeah, just let me know, right? Can we look at Alibaba as well? Yes, we could definitely look at Alibaba, right? Now let's use these two stocks because these are two great examples that you could apply in all your other analysis as well. Alibaba, I did see some activity. Let's do Cloudflare first, right? Because this is a stock that I'm also eyeing. Again, as you guys know in here, my style is like I don't like to give the answer directly, but yeah. So okay, so if we zoom out, we know Cloudflare is beaten up, right? So we zoom out right here real quick, and we know it's beaten up from highs to lows. This thing is down 79%. So climatic selling, crunchy buying behavior, right? Then we zoom back into the daily. What can we identify? So to calibrate, right? You know my style. I like the 200-day moving average, and we're just about above that. Now the other thing I like is this automatic trend line right here, which is 2 points make a trend line, and then boom, we are over that trend line right there. So that's one signal to, in my book, that says, hey, a reversal might be happening, right? And then the other one is the 200-day moving average. Can we add another one? Can we add a technique from Bukowski's analysis? Well, I think what we have right here is sort of like a scallop, right? A scallop, scallops are basically like rounding patterns that he discusses. So basically, where the stock kind of you start to see rounding action, right? Rounding action is reversal. Basically, it's indicative of a reversal occurring. So going back to it, so we see that there's sort of like a rounding action right here. I know it's hard to see because you can't see the little dot, but I'll focus there. So let's go in here, go to his website, his index, right? We'll go to the picture index. Again, I'm going to be doing this a lot more moving forward because I think his work is really fantastic. It's just really good. So what we're looking for is something that matches what we see in here, right? From a visual perspective. So what I'm looking for is a scallop. So this one could be a descending scallop right here. I think this one fits best as far as I know. But if I look at any other one, let me see real quick. I know you gotta be kind of quick on the eyes, right? It's not this was this Three Peaks and Doomed House. That's interesting. But I really think it's a scallop descending, right? So we're descending, and then we're rounding at the bottom. So let's click on this one. Hold on. It also could be the bump and run. There's actually one more. Sorry. Actually, it's this one right here. I think it could be the bump and run because we do have a trend line, and we're outside the trend line. If you could see right there, it's kind of small, but it's the bump and run reversal bottom. So let's take a look at this, right? See if it fits that criteria. See, let's use one of his examples down here to see if it fits. Does he have any examples? A bump and run. Let me see. Okay, let's just see how he defines it, right? Overall performance rank, 1 out of 39. Break even failure, 9%. Average rise, 55%. Throwback rate, 61%. Percentage meeting price target, 76%. All right, let's keep going. Use the arithmetic chart, not the semi-logarithmic one, because you will use it to measure vertical distances. Shape of it, it's a frying pan tilted down with the handle on the left. Does that kind of fit the criteria? So there has to be a handle. It's like a frying pan, and then it bumps and it runs. All right, let's go back. Let's go back and look at it, right? It kind of looks like it, you could say, right? Where if I switch over the red, you could say we kind of have a handle right here, right? And then we kind of have a pan, and we bump right here, and there could be a potential run. Again, it's this will take some time to kind of figure out, but these are real market techniques right here. All right, this is real techniques that market technicians use. Now, I could share with you what I'm thinking as well, right? We could overlay with some of Kay's strategies, like this right here, right? We're looking at a lot of different things right here, and these are all things that we have to practice. You literally have to practice like every day. We know that in terms of like the activity, right? There's a lot of volume activity right here. So someone is probably interested in this area, right? In this area, right? I'm guessing there might be a whale right here. Let's say whale one, and there's a lot of like rounded activity right here, and it did bump the trend line right here recently. So this is a sample. I mean, I think this is a strong sample of like a potential, reversal that's like developing right here, right? Does it mean you run out and buy it? Well, no, it comes down to, who you are as an investor and what's your style, right? I'm just introducing you other styles that exist out there because, there's so many ways to play this market, right? Um, but yeah, that's sort of the take right there, right? Rounding out, bump, and then let's see if the run could occur. So this one is on the list. It is approaching above the 200-day moving average, and then you also see massive amount of activity here. Now, if we add in more data, it becomes a little bit more clean, right? We add in more data. Now you can see like, okay, let's say now that we added more data right here, is there a scenario where this goes down further, and how much further can it go down? Absolutely. So now that we added in a little bit more data, right? We know that there's one bump right here, and there's one bump right here as well. So let's say this 200-day moving average, or this trend line right here acts as resistance, then it goes down further. If it goes down further, then the next possible area where it could bounce is right there, right? Now at the same time, that might make a lower low. So that could be resistance, and it could go lower, or it could come back up and then basically play this this trend line, this descending triangle basically, right? There's also a pattern on that as well. But that could be a scenario to think about. V says for net, there's also a pretty big bullish candle near recent low which I also think is bullish. Yeah, I mean, there's so many ways to look at this as we're discussing here. Um, but we I think it's helpful to apply this sort of analysis because once you come to conclusion about a stock or whatever vehicle that you want to buy or sell, then the next thing you do is you might want to think about entry. Now, if you're a long-term investor, then you probably don't care about entry. You don't want to look at the charts. But let's say if you're actively trading. If you're actively trading, you might want a really good entry point and what to expect. So by studying the behavior of the markets, which is basically studying the charts are the behavior, right? Because whatever the fund manager or the big money, the whales out there, whatever they believe, they will go in here and reflect it in the marketplace, right? So let's say Bernard has a lot of money. Bernard has $1 billion. If he feels really bullish about net, well, he knows that it's going to take him a few days or weeks to months to acquire a decent position in Cloudflare. He can't position all at once. If he positions all at once, then it's going to show in a very emotional, climatic manner in the stock market, right? So it really helps to identify these climatic, buying action and climatic selling action, because it's man, it really works. Like we saw that with the S&P 500. Like if you saw the climatic selling days prior, man, like look, I'll show you real quick, right? If you saw the climatic selling, right? So again, using the baseline analysis that I do, or the industry does, which is like the 20-day moving average. Here's where my first arrow right there. That's like the first climatic selling, right? Here's another second climatic selling, and then here's a third climatic selling, right? In which case it broke the 50-day moving average, which again goes back to our baseline model, or swing trading baseline swing trading model, or the industry's baseline swing trading model, and it comes down and it abruptly sells down, and you have a lot of gaps. So you see what I mean? Like we had one, two, three, like three climatic selling scenarios that basically would have like warned us about imminent red light. But then like it quickly now we got a V bottom, which is like, geez, this is like really choppy. And then the question is like, how far can we go from here? So pay attention to those climatic moments, right? Those climatic candles. They're quite powerful, like CrowdStrike, right? If you zoom out, um, uh, let me see. When you zoom out, you see climatic candles. So on the weekly now, look at that climatic candle, followed by more, and then if we get one more green week, then you get basically a reversal, which would be they call it the three white soldiers. I don't know why they call it the three white soldiers, but that's the that's the candlestick pattern, right? If we actually go in here, and we go in here, let's go to the index, right? And then we find soldier. Uh, it's not in here. Is that's the chart? Where's the candlestick? Candle pick index. And we go in here and we find soldier, right? It's called the three white soldiers right there, and that's a reversal pattern. So three white soldiers right here, right? Three white soldiers. Theoretical performance, it's a bullish reversal. Again, this is more advanced stuff, right? Because um, you know what's funny? Like eh, the difference between like a highly skilled like investor and trader versus like a beginner is the compare and contrast is like it's so obvious. It's the really sophisticated player. They're looking at many different layers of this on the screen. So let's say Bernard and V, right? Let's say Bernard is the rookie and V is the professional, right? And so Bernard might just look at, and both could still make money. But Bernard might just look at a standard chart like this. But V, he might be looking at the layers and the setups and the scallops and everything and the price and the percentages and the ROC and the MACD. That's really the difference between like I mean, one is like you could be overloaded with information and you do nothing because at the end of the day, the money play is in the execution, right? So both could make money. Don't get me wrong, both could make money, but just some folks might want like a higher level of like clarity or understanding. But don't let that understanding stop you from making transactions. Is my other take on that. So, anyways, going back to the three white soldiers here, as we were analyzing, uh, that was for what stock was that? Was that Cloudflare? I lost my train of thought here. Uh, I think it was for net, right? Oh no. Let me see. Let me see. Let me see. Did I close it out? I probably did. Let's go back. Oh, yeah, CrowdStrike. My bad. CrowdStrike. So, but then again, you also want to know the story, right? Because like, look, when did it sell off? Massive amount of selling action in the last couple weeks here, and I mean, if you look at points of reversal, like it bounced where on the weekly 200-day moving average. That's amazing. On a psychological $200 mark right there, right? Climatic selling followed by whole psychological whole dollar support right here. Amazing. Oh my gosh. That was really amazing. Prior resistance right there as well. Again, these chart analysis techniques, they really work, but you kind of have to see it to believe it. Uh, yes, I like being the rookie, Bernard says. Uh, it's scary on both ends, I think. You know, being a pro or being a rookie. Because like the more you know, it's also kind of scary. Maybe. I don't know. For net, there's also a pretty okay, I read that already. But yeah, this is the I mean that is the underlying difference, right? Now, what else can we understand about what we see on CrowdStrike here, right? 2 points make a trend line, so we do see a microphone pattern right here, right? You see a broadening wedge. So what does a broadening wedge mean? Let's go back to his, his candlestick picture index right here, and let's look for a broadening. Well, is it a broadening bottom? No, it's more of a broadening top, right? Because like we're coming into it. Prior was a rally, but hold on, let me go back to CrowdStrike and confirm that real quick. Yeah, this is more of a top, right? Because if we zoom out, you see how we rallied into it. So it's a broadening top, not a broadening bottom. So you see the broadening right here. If you don't see it, I will annotate it for you. Can we apply some statistical analysis to some of these market scenarios right here? So this is it right here, right? That's the broadening, and we know that it came up, so it's a broadening top, right? And so it had 1 point here, it hit the midpoint somewhere there, traded around the midpoint, found the top point, at least the way the machine identified the top point. It hugged the top point, rejected, failed, came all the way down sharply to the bottom point right here, right? So moving forward, we know that these lines will work moving forward. It's don't if you ask me why, man, it's just how the markets work. Because collectively there's so many players that we don't know what the other players looking at, right? We don't know what other principles, values, or skill sets or experience that the players have, right? It could be a bunch of newbies who are jumping in. It could be a bunch of funds who are jumping in, who are playing a certain way. And certain funds have to accumulate in certain patterns, and they usually reveal themselves. But what I do know is that they say 95% of the markets is actually institution, and then like 5% is like retail most of the time. Kevin says, what will happen to CrowdStrike stock if they get acquired by another company? Well, the other company, so like from a price pattern perspective, Kevin, I could tell you what happens from a price pattern perspective. Usually acquisition patterns, it looks something like this. So let's say they get acquired. Let's just theoretically say they get acquired for over $500. What happens is it'll just gap up like this, and then it'll just go basically like that. That's the gap up pattern basically, right? Now, if you're talking about getting acquired, well, I don't think any logical corporate board member or boards of directors, whichever, would be thinking about acquiring a company that just recently hit a global news, right? Again, I didn't analyze the news to understand and measure the level of impact. I'm only looking at the price action here, which is a chart, and what happened to the stock price to kind of gauge what happened to gauge the impact from a market price perspective. I don't know the fundamentals of the news because I'm not, the high level expert on like, well, what happens when you have like class action lawsuits across the board, right? But what I do know historically from my specialized analysis is that a climatic candle like this, yes, it will always lead to a bounce, and the bounce will always like it could bounce to 300 and then come down lower. So my forecast on this one is that I think it could potentially revisit. Look at these levels right here. Let's talk about what levels go to revisit, right? We're looking at the monthly chart, by the way. So we go in here and we look at the different levels right there. So we look at the different levels. So that's one level right there. That's another level right there. Another level right there. Another level right there. And another level right there. So if we talk about potential areas where it could go back, well, this is the first level, so it bounced, right? The question is like, how much can it bounce to? Let's say it bounced to this 300 level right here, but there is no existing volume to really tell us where it could be. So I don't know how far the bounce could go, but let's say we come back down and we go lower, then this would be the next area, right? We go back up, we go lower. go back up, right? It stays there, confirms that it's resistance, then we go lower, right? That could be the scenario. I don't know, but uh, again, this is how we gauge the movement of the markets, right? Jeez. Okay, random messages. Uh, but hopefully that helps and gives you perspective. Now, this is different, right? Like now we kind of have to change our strategy because this is a event-based strategy at this point. And an event-based or event-based strategy is the umbrella term, and then the subcategory of it is uh, negative catalyst. In which case specifically it's a hiccup, cybersecurity hiccup, right? That ripples with many lawsuits moving forward. So I don't think, again, I don't think anyone will make the decision. But again, I don't understand the news enough to really consult or share my a deeper perspective on it. But I could tell you from what I'm seeing from a price perspective, right? And like how would you play this bounce? Because playing the bounce is also pretty hard too. Let's go on to the next stock. Or any other stock that you guys might have. But there's so many. There's so many to talk about. Like there's so many exciting things in the marketplace. But you just have to have like a framework of like how to engage in it, right? Uh, man, man, uh, this thing was very choppy indeed because like you had like earnings around earnings climatic selling, then earnings gap up, right? And then gaps up again, and then really, crunches up here at that upper trend line, looking to break out at 400 almost, but instead it goes back down, and then the moment it cleared this, it became very bearish. So, my gosh, like this thing was just very difficult for, I mean, on both sides. Uh, yeah. So let's see. Uh, some questions coming in here. Yes. So John, it is audio only. For the folks on the live stream, it's audio only at this point. I mean, maybe like the first like 10, 15, 20 minutes, like there's visibility, but after that, no. Defense stocks, I'm actually really bullish on, right? So Lockheed Martin, like I was looking at this one yesterday, and I'm just thinking like this thing could go a lot higher. So this one's a different type of play, right? This one's like cat out of the bag and it's running higher. You zoom out on Lockheed Martin, this thing's going to all-time highs. So what do we know about clearing overhead supply? There is no overhead supply. This is at all-time highs. So markets are now in discovery mode, and this is the hardest for a lot of like investors and traders to be able to buy, to be disciplined and buy all-time highs. But that's where my mantra comes back, which is like, don't be cheap. You'd be surprised, right? A lot of times the reason why you're not able to capture really good gains is because most of us are being cheap. That is genuinely a real consumer, what's it called? Consumer, how should we define it? It's just that emotional, I can't find a word for it. Like, like this thing is clearly going higher, but most of us can't buy it because we don't have that discipline. But this is, the big player has got in, and the big player has been accumulating right here, very orderly, I would say, right? And it's gonna go higher. But the also scary part is that it could shoot back down as well. But that's like, again, if you set your risk, like let's say, this is, you get in right here, this is your risk right there, or the low of that candle right there. The low of that candle is your risk. If you follow that principle, I think you should be okay. Then now you can play anything that goes crazy, to the upside or downside, as long as you use the prior bar as your stop. I think the prior bar is an amazing tool to use as like a stop, right? So wherever you get in, just use the prior bar as like your stop, whether it's long or short. So, prior, whatever bar it is, use the prior bar as your risk management. That way, again, well, I guess it'd be this bar, but then this is the stop right there, guys. That's where we get out. So let's say you get in right here. That means you would get in right here at 560. Your stop, again, this is on the monthly. Your stop out would be the low of the bar right there. It's just a rule that you have, and you just follow that rule religiously. But yeah, Lockheed Martin, it's gonna probably go a lot higher. I'll be looking at calls on this one. I am eyeing calls on this one, by the way. uh, because this one could rip and run pretty quickly because the capital is being actively deployed right now, right? Where you look at other stocks like PayPal or Okta, the capital is not being actively deployed right now. You see what I mean? Like if you think about it from a geometry perspective, right? A stock that's like this, right? That means the capital is not being actively deployed. But a stock that's like this and trending, the trend is your friend, that's capital actively being deployed. So I like to play momentum, which is basically capital that's being actively deployed by a very large player, or capital being, not deployed, right? Capital actively being pulled out. That's why the trend is your friend, because we understand that this game is, it's institutional players are playing this, right? So if you think about it, right? Let's just say like it can't be, look, like it's none of us in here that are coming in and like, let's say someone is selling, right? Let's say, can we really say it was Bernard that came in, sold this day, he comes back, he sells this day, he sells this day, he sells this day? Come on, Bernard's not going to do that, right? Bernard's going to look for, we're retail, we're the 5% of players in here. This is how institutions play. Some other player will hold like start, keep distributing, keep pushing resistance down. We need to understand that. But then the moment it unlocks and then it starts to run, then now you have a group of institutions accumulating. So we need to understand basically the 95% of players out there, which is not your peers. It's really the big money, right? We need to understand like the Stanley Druckenmillers and stuff like that, the George Soros. And that's why another angle analysis that we do in here is that I literally go in here and open up their portfolios and we take a look at their portfolios. So that's another powerful technique. And in a way, it does overload folks with information, but you have to figure out what type of analysis you want to do um, to basically fit your profile of risk tolerance. And then when you get big enough, right, when you start trading big enough, then we can play with the bigger players, and that's where I think, man, I think that's the fun part, right? Because we go in here, we could look at George Soros or who's an interesting investor these days. I don't think Nancy Pelosi's in here. Is she? Yeah, I don't think so. Prem Watsa is another billionaire out there, but we could look at. Let's just go to the gurus, right? I love this tool. Uh, all right, let's just do latest guru picks right here, right? We could click on any of these really wealthy folks out there and see what it is that's in their portfolio, and very powerful information already. Oh, Bill Gates, man, I was actually looking at this the other day, and I was just like impressed with this guy. So this is Bill Gates' portfolio, right? Now, hold on, look at his performance. Let's go back to summary. I'll show you this real quick. Bill Gates has $47 billion right here, right? This is 47 billion as of 14. What's today's day? Is that like 2 days ago? Yeah, 4 days ago. So this was updated 4 days ago, his portfolio, right? 4 days ago. And look at his performance right here. Look at Bill Gates' performance since 2009, 8 billion all the way to like 47 billion. That's pretty good performance, right? So now we know the performance of his portfolio. Well, shoot, we could go into his portfolio and see what he's holding. So we go in here, look at current portfolio, and we could see, let's see, let's look at the pros portfolio, right? We could see that his biggest weight is this company, obviously, right? 37% of this company, and this company. Oh my gosh, he's in this company. This company went on my radar recently. Hmm. Oh, I did not know he owned this much, 15% of this company, right? You see, like, he's in John Deere as well, right? So now we could just basically build this sort of like, let me see what's the breakdown. It looks like an agricultural, but he has a lot of waste management in his portfolio. So WM, let's take a look at this stock. All right, this is where we generate ideas. I could generate ideas like all day long, I feel. But you can only take so many trades as well. Let's zoom out. Let's zoom out, see what he's working with. All right. So he's been positioned in this company. That's wild. That's very wild. Uh, yeah, this one had recent climactic selling on earnings, so earnings gap down. Massive amount of volume right here, right? If you can see that volume. So we know that it's stuck in this range right here. It's in a trading range. And do you see Bukowski's what can we classify this as? Oh man, hold on. Let me do this. What can we classify this as what we were analyzing earlier? You see it? You have a top broadening wedge, right? And we could play that, right? We could play this, we play these if it comes back. But currently, this is where we're currently at, right? Right below the 50 MA and just kind of like wedging up right here, right? So that's where we're at. We could go down to the 200, which would be another point, potential support. But once we clear that, it could be down or it could be higher. So going back to Bukowski's website, it's a broadening top. We go in here. What's the rank? It ranks 22 out of 39. Break even failure. Well, let's see, what can we learn about it? Touches, measure rule. Let's see. So A, let's see. Let me see, measure rule E. Man, it gives you like rules. It's really cool. Like it calculates, he calculates like, on average, like where the stock could go to based off of like what it does, right? So it also proves me, I shouldn't say, well, it surprised me in many different ways, I would say. Let's see, partial rise works 52% of the time. A partial decline works 72% of the time. So this is like a bearish pattern, it sounds like, right? Because this is a topping, broadening wedge. But then I'm looking at EO here. Let's see what he said about E. Sorry, I'm just looking around, respectively. So, okay, let's read this. Compute the difference between highest peak A and lowest valley B, right? So A and B, you compute that in the pattern to get the height. So this is the height right here, A and B, that's the height. Add the height to the pattern's top. So we take this and we add it to the top and we have D. Uh, for upwards breakouts, works 66% of the time. So if this thing trades higher, it's going to go to D, which is the distance between A and B, or subtract it from the pattern's bottom, right? Downward breakouts works 42% of the time. So my bad. So if it goes down, it happens. The probability you're playing is 42% of the time. Versus like if it goes higher, it works 66% of the time. Or multiply the height by the percentage meeting price target, okay, and add it to the highest peak A upward breakout, or subtract it. Okay, so there's quite a bit of things you do. Okay, so it seems like, yeah, it could go either way, right? But I mean, I'm not a fan of this type of pattern. When prices touches the bottom of the trend line, let's see, buy at third touch at C and begins rising. Warning, this is a high risk entry, right? Short at the top, when prices touch the top trend line, it begins falling at A. Yeah, you don't say. Um, okay, let's see, throwback, both hurt post breakout performance when they appear. So, again, it comes down to like you read the stats on this, right? The situations, like the tendencies of what could happen. Then you might decide, hey, this is something I don't want to play. So you kind of go and you figure out what fits your profile in terms of like analyzing. But anyways, this to me, this looks bearish to me. Um, I mean, the way I look at this historically, or still, if I could draw it to you, this is my logic right here, right? If I got you through my logic. One is like I see the volume right there, and I see that it's basically holding on to this area right here, right? So there's a chance that this thing has a downside, and I'll draw a trend line right there. Breaks that trend line, then I think it's going to get pretty bearish because we explode away from the horizontal volume right here, right? So we know that there's a whale accumulation happening right here. We also had a climatic selling catalyst, earnings gap down right here, right? And then crunchy consolidation, recovery, retracement, but back to resistance. I think this area is resistance somewhere. So if we don't, 50 MA is resistance basically. If we don't break out and go higher and fill this gap, right, then I think there's a higher probability that we go down. And you can play either way. So that's kind of how I go about with the logic, right? Um, Sorry, I didn't look at the comments for a while now. I realized that. I have to run getting married. Oh, wow, Evan, congrats, man. Did he already leave? That gentleman's getting married. Oh, he's still on. Well, congrats, Evan. This is what a great day. Congrats, man. Best wishes and best of luck on the party tonight, it sounds like. I can't believe I don't even know why you're here. You should be here. You should go. But wow, happy to hear. Okay. Let's continue. So I mean, you don't have to be here on the training day, right? I'm here to train every week, just as much as everyone else. Um, this is really the passion. So And the journey is long, but you gotta enjoy the way. So hopefully you guys are enjoying these analysis sessions as I'm diving deeper into the charts and showing you. Because I'm not necessarily talking about trades for next week, but we could talk about trades for next week as well. There's actually a good amount of trades next week, right? Um, Palantir, unless do you guys have any other stocks you want me to try to analyze and show you like what I'm seeing? Because there are some really good stocks that we could look at, like ServiceNow right here. This one's already moving to all-time highs. Um, this one's probably going to be explosive, right? Quite an explosive stock. See, it's already cleared 800, and because we know where the shorts get out, right? The shorts, if they were short, they'd be like, okay, 850 is my stop. But we know that once this clears 850, once we clear 850, we go into all-time highs, and there's no bag holders at all-time highs. There are no bag holders at all-time highs. There are bag holders at beaten up stocks, and so you experience overhead supply. Uh, V says interesting to see similar analysis on Upstart too. Let's take a look. Let's take a look at that. Why not? We could apply this principal analysis to any stock. It's basically the same. So here's Upstart right here. Okay, so this one I wouldn't say this is a bump and run. This is sort of well, let's zoom out. Let's see what we could confirm, right? Okay, so you see what I mean? A stock that's like this, man, massive overhead supply from like 400. But we know this one could be a runner. Um, but it's definitely going to experience a lot of selling, sell-offs as it runs. That's the thing, right? It's always going to, yeah, dang, look at that. Climatic, running up, climatic selling. It's stair steps up, elevator down. Stair steps up, sort of elevator down. But this is what we're having with this one. So, it helps to know context, right? One is we know that there's a lot of overhead supply right here from these bag holders. Two is uh, now we zoom in and see what we see in recent days, recent trading days. And if we analyze the volume, right? Let's go back one more time. We analyze the volume. Yeah, this is like the highest amount of activity ever at this price. So if it's anything, this is where accumulation is happening. Now, I want to do a little bit more analysis. I want to go into Upstart right here, and I want to see who's the owners of Upstart, right? I think when we practice enough of like how to look at a stock, I know what levers to pull. So in this case, I want to pull an additional lever because I want to see who's owning the stock and anyone that's particularly bullish that stands out, right? Like, are the founders still leading the company? Are they still holding material amount of shares, et cetera, et cetera? So we go in here and I want to see like, okay, this is the shares outstanding. These are the fund holders, by the way. And we're looking at Upstart and we go in here and I don't see anyone with a high conviction position besides this one right here. But, they own 1% shares outstanding, which is 1% of their portfolio. But this is an ETF, right? Global Robotics and AI. So this is Upstart Credit AI, you can think of, or Lending AI. So I don't see any high conviction holders, right? So that's not necessarily a bad thing, but it's okay. Now I'd like to look at the founders, see if they still hold the stock, because it looks like this gentleman Paul Gu over here, the CTO, owns quite a bit of shares, but I don't think those shares are significant enough, is it? Actually, yeah, no, that is significant because this is, wait, hold on. This is 7 million shares. So yeah, that's not significant enough actually. That's less than a million shares. So if he owns 800K shares, he's basically like a 1% owner. So he's got 1% interest in this company. Or like from a collective ownership perspective, right? So I don't see anything where it's like, here, I'll show you the competitor, right? AFRM, right? If you remember the CEO. So again, this one's pretty good. This analysis is pretty good. Man, we could craft analysis all day, right? You guys are okay with this content, right? Like, is this interesting for everybody? Like, I hope it's helpful. I love to maybe hear feedback from anyone else. Like, yeah, anyone else. Like, if there's anything top of mind, like Mel or Liz or Praveen, like, don't be shy. Just ask away, and we could dive into it. But I'm just showing you like all the corners of analysis possible, and then we get into the charts and show like specific entries and exits, how to go about it. And then if you practice that long enough, I think we should be able to, we'll prosper. I like looking at where others like Gates invest, learn from the winners. Exactly, right? Yeah, okay, okay, okay. We could definitely do a lot more of that, right? Because this is like your opportunity to ask me to pull out my expensive tools right here. Like the tool that we're looking at right here, I think I told you I paid like $1,300 a year for. So really powerful tool. Um, and we could look at more pros as well. So I'm looking at a firm right here, and what I wanted to see is I don't think we'll see the gentleman's name in here. This is a firm, right? A firm holdings. We go down, top direct holders, and the biggest one is this person, but that's not what I'm looking for. This Advent Capital is willing to own 23%. This is the boss right here, right? They own 23% and they're willing to bet almost 2% of their portfolio. I'm curious if Stanley, no, he actually went out of his IWM calls. I actually looked at it the other day. So, and plus IWM was like a really solid setup, but it was a busted pattern. So a busted pattern becomes a short, right? And Bukowski covers busted patterns, which is very fascinating as well. But real quick right here, I don't see a big, well, there's a growth portfolio right here. What's growth portfolio? Let's open this one up. So some person out there, oh, this is Morgan Stanley's institutional fund, 5 billion. So, oh man, look, if you want to craft a growth portfolio, this would be it right here. We go in here. This is a $5 billion portfolio, as you see right here. It's by Morgan Stanley. If we go down, we can see the weighting and see what are they most bullish on in terms of growth. Cloudflare. Huh, I'm not surprised. These, oh my gosh, these are all like, man, like these have the, I mean, I'm looking at these stocks. This is actually a pretty good growth portfolio. Let me see. Is there an ETF ticker on this? MS. Oh, it's just, okay, so I see. It's just probably a mutual fund then. I mean, we could always make our own portfolio as well. But okay, let's go back to another topic. So IWM, not IWM, Stanley Druckenmiller, right? Man, you should also see George Soros' portfolio because Stanley Druckenmiller and George Soros they used to work together, right, at the Quantum Fund. Back in the day when they were, hotshot, very known hedge fund managers. Now in their retirement days, they're very quiet, managing about, $2.92 billion. Now, if we look at Stanley Druckenmiller's portfolio and we see the weighting right here, you can see that he took off his IWM call position, right? What he has now for in terms of calls, it looks like he has a call on Philip Morris International right here, right? His biggest holdings is this company right here, Coherent Group, right? And then he's still in Coupang. He really likes Coupang, it looks like. So, and also, 6% Microsoft. So let's see. Let's look at COHR. I actually want to see the chart on that one. And what can we identify and learn from the charts? COHR. Man, I really feel like these days, like I have a really strong grip on just like the markets overall. Like I could tell when the overall global markets are in a good environment, which is my red light, green light analysis that I do every week. So when we know it's green light, we know certain plays work really well. And then when it's yellow light, then we know it's kind of choppy. And then when it's red light, we know probably shorts work better. So the last call out I gave, judgment call, it was a yellow light because I feel like right now it's like a choppy condition. But from what I'm seeing now, it might be a green light, maybe a green light, which is this right here. So let me digress a little bit more. Sorry, I apologize, but this is what I have right here is the $8,000 indicator, right? Like collectively, all these indicators cost about $8,000. And if you look at this part right here, what I did was I took Meta, Microsoft, Apple, Amazon at the upper right. I know it's kind of small. Amazon, Google, Tesla, and Nvidia. Basically, it's a consolidation of the Magnificent Seven. So if you look at it right here, we finally have a green teal, and we finally have, basically off the squeeze pro indicator right here, right? We finally have it above the indicator, and it's gone teal. So you see, like even like John Carter and stuff, they're the ones like simpler options. They're the ones who basically created these indicators, and even they, for his long signal as a grandmaster, I would say, because he's been trading for a long time, as a grandmaster, his signal also says long, like not where, we don't really capture the bottom of the fangs, right? Like their signal is like they don't buy until later either. So I'm kind of like that, and so I realized like, like, is there a way that I could really capitalize on these reversals because they're so juicy? I realize, right? Because like what I have is more of like a swing trend following system that basically lets me know when it's a good environment and when it's a bad environment, which is really good for when capital is really being deployed. But then when conditions are choppy, then that model doesn't work, right? Now I have to rely on a different model. Man, it's like I have my model repositories and fine-tune experiments and everything. It's crazy, right? Edward, it's like every Sunday I'm experimenting. If you think about it, I'm doing like model experimenting all these years without even realizing it, which is like wild. But I have my repository of like strategies and everything, right? And it's a lot. It's like a lot. Well, okay, I wouldn't say it's a lot, but it's fun, right? Like if we actually, so here's an example, right? Like these are all the strategies that we talk about. Look, there's compound strategies, which is something new that I'm coming up with, which is basically lining up monthly, weekly, daily charts to line it all up. But if you do like technical based strategies, you got momentum, flags, reversal, breakouts, channels, all this stuff, right? That's technical based. You have sentiment based strategies. Is it a narrative based? Is it euphoria? Is it mania? You have fear based strategies. You have like event driven based strategies, catalyst, episodic pivots they call it, which is EPs, IPO pops, earnings, M&As, right? Fundamental high growth stocks, corporate share dilutions, leadership changes, on and on and on. Macro based strategies, right? There's like so much interest rates based strategies. So I was just jotting down like all the strategies that I've seen and what I like. And every scenario we have to structure, it requires structuring a trade idea, right? It's kind of like, like if you want to get a loan, you have to go through like an underwriting process. This is like the same thing. If you want to identify like a really good trade that we could execute right now based off of like known knowledge, yeah, like it's just like you just gotta have to say, okay, what environment are we in? What's the environment, the market conditions? What stock am I looking at? Is that stock behaving in any certain way that's climatic, et cetera, et cetera. Um, Praveen says we get all this in one place. Wait, what do you mean we get all this in one place? Are you talking about the tool that you're building? Or, or are you talking about the Sunday Investment Club with K? Because there's a lot to learn, right? It's not something that could happen overnight. But if I were to tell you, do you need to know all this stuff? No, you don't necessarily need to know all this stuff. But it will require it. What it will happen is you will be operating in the dark if you don't know this stuff. Because like there are people who are making a lot of money with like just a set of strategy out there, right? For me, I just I love to explore different strategies. This is what I'm passionate about from a hobby perspective. So I'll invest the time to understand the different strategies, but most of the time I'm trading the same strategies over and over, right? So realistically, like there are traders out there who just make money from the same setups over and over and over. In here, I give you a buffet of strategies and what other people are doing because it's like what I like to do. But at the end of the day, what I practice is just like, I'm just like, let's say focusing on options, weekly options on like top shelf names, right? And then sometimes you have like an event pattern, right? An event pattern is like this one right here. This one's like a hot ticker this week. So like ASTS, right? This is down in smaller cap territory. This one is 4 billion, Russell 2000, right? This one was like a big runner. So this one would be like momentum swing trading right here, right? Um, but there's so many strategies uh, that you have to stay organized. Excuse me. The coffee is making me burp. Excuse me. You have to stay organized, and I would recommend having like a journal, like how I have it over here, right? I have a pretty expansive journal. It's like a cloud journal in here. I use OneNote, and basically I just map out like the different strategies, what other people are doing, journaling your trades, stuff like that, and you just getting used to routine, right? Like how like professional traders actually do it. But yeah, this is one of those like event plays right here where this is a really nice swing, but you have to have discipline to be able to buy it, and also like imagination, right? Because like how would you like let's say right here, right? Like at $9, you would have said, "Oh my gosh, that's way too high. I can't buy at $9," right? But then look at what happens after, right? It starts to consolidate, moves higher, right? It clears that candle right there, goes higher, goes higher. So the problem is if you understand this, right, the mantra really is don't be cheap. Because someone could say, "Oh, it went from $2 to $9. It's too expensive now." That's basically being cheap right there. It requires a lot of like emotional toughness to say, "You know what? I think it could go higher." right? And then it goes up to, it goes up to 31, right? Exactly. It could also fail. It could also fail. But that's why I'm saying, look, let's say this was a scenario, right? Let's say you were in here, and you bought at the peak right here, right? What's your stop? Now, you can't say the prior candle because the prior candle is too far away. Then your stop would be like, you know, $5.40, let's say. That's too far away. So what would your stop be at $9 right here? You would say, all right, I know I bought it in at nine, I top ticked it $9.35. If I'm hyper conservative, I'll do $9, right? Or I'll do the close right there, which is like, yeah, $9 right there, basically, or 902, right? Now, if you're smart, you probably give it wiggle room because this is an event pattern. It's an event, it's a catalyst, right? Big volume came in, we don't know why, and we know it's an event trade, right? So then I'm going to have a wider stop, maybe like $8. So let's say you top ticked it $9.30, and you know you're going to do $8 or $8.50, right? Those are your stops. You probably would have got stopped out right here because it went down to 760. I know it sucks, but that's just how it is. You stop out, and then it came back and it pierced your high again, right? So now you're like, all right, I gotta try again, right? You gotta find a point. Maybe your point is the 5 EMA or the 10 MA SMA, right? But eventually, you finally get one, and then now it breaks out in your favor. You hold it, you hold, right? And then you probably sell like, well, because you got in from 9, it goes to 12, you probably sell. But it gets very hard, right? Very hard waiting on stuff like this. You just gotta find a way. One way was like, hey, this thing held the 20-day moving average all the way through. So I'm holding until it fails the 20-day moving average, which is still holding technically. But now you have another burst to the upside, which is suggestive that it's probably going to go higher, right? But I don't know if folks have the guts to be able to swing something like this. But definitely a play out there for sure. The other cool thing about the Fangs, though, the ones that I like to play, the Fangs, because if you go back to the Mag 7 over here, we pull up the Fangs. Oh, no, that's the SP 500. We pulled the Fangs. Oh, where's my chart? Oh, there we go. We pulled the Fangs right here. Or not the Fangs, the Magnificent Seven, right? The beauty of this is that it essentially like never goes down. Like they're critical to the economy. So if we just plot like simple technical analysis in here, right? Just simple technical analysis in here from one point to the second point, 2 points make a trend line. Then the next time it comes down here, that could be a buy, right? So yeah, like you just know like Nvidia's not going anywhere. So when it's sold down a lot, you go in there, but that's a reversal play. I might not look for a reversal. I might look for a trend continuation. But again, it helps to understand the modes of the modes of the market. To understand the modes of the market, you have to do extensive analysis like this. Edward says it's funny. It looks like volatile in a shorter time window, but the smaller bumps don't seem significant if you zoom out. Exactly. Exactly. Like right here, right? Like it's always going to look scary. And it's always going to test you like, hey, are you being cheap or not? But this was a clear breakout right here at $6.70. So it's always going to be like that. And we could apply this to many different stocks. Don't give me what Moderna, right? Moderna during the pandemic, or even Zoom during the pandemic, right? So look at this one. I mean, we already know this one, right? It always looks easier in hindsight, but but in the moment, it's always like I'm buying, like, oh my gosh, man, I'm buying at all-time highs. It's always like that in the moment, right? If we go to the weekly here, it's always uncomfortable. It's never comfortable. And then when you realize that, you're just like, yep, this is how it works. So like let's say you bought this, right, at 200, it always feels uncomfortable. That is the reality, right? You can even look even like right here, right? We know Moderna went to like $400 or whatever, but even at 90 bucks, it's uncomfortable. It's always uncomfortable. So you have to learn to get uncomfortable because that's the only way. There's no easy trades. All the good trades are hard trades and they're not cheap. All the good trades are expensive. It's when you act cheap is when you start losing money because the markets are that smart, or at least I think so. But very, very insightful stuff today. I'm telling you guys, like this stuff is worth a lot of money, in my honest opinion. Let's take a look at George Soros real quick, because I did say, these are legendary fund managers who are managing billions of dollars, right? We go in here because we want to understand what this gentleman's managing and how he's going about it. So this fund specifically, 4 billion right here, right? This is his Soros fund management. This is my dream right here, to get to a level where I just manage my own family office. The Huyn Fund Management LLC. That would be a dream, but we got to trade our ways, or we got to do business and transact up to that point, right? So we look at George Soros now. His For his age, I'm impressed, right? I don't know how old is George Soros now, but I'm very impressed with the style of like his portfolio. So this is his portfolio right here. If we look at the weighting, right, this is the weighting right here, and then 4.5% in S&P 500. But the gentleman's willing he does a lot of macro bets, right? Like he's got puts on he's long calls, or he's long on SPY, but he's also got puts on SPY, puts on Apple, puts on Costco, right? So and then we know Rivian's beaten down. He's got calls on Rivian, so he's bullish on Rivian, right? In a way, this is a levered Tesla bet, because we know that if Tesla performs, then Rivian will perform, because it's just a comparable vehicle out there, right? So if Tesla performs, Rivian performs, and he's not playing stock, he's playing call options on it. And he's willing to bet 1.67% of his family office on Rivian calls. So they're probably leaps. He's probably playing leaps on this, right? And again, this is billion dollar fund insights over here. We see how the big players are playing. We go here and we zoom out, and we see how George Soros essentially thinks, right? He's managing like what, $4 billion, and he's got calls on this, and we know from the technicals there's a lot of volume here. So again, guys, like if you want to make a lot of money, again, I shouldn't promote it that way. Um, all investment, everything in here is just financial education. All right, I gotta make that clear over and over again, because some people just, I don't know, like some consumers oriented folks out there, they get very emotional about like, hey, like this is what was said, but this is really education, because I can't promise that for everyone. Um, Edward says he's long on stocks that go downtrending, short on stocks uptrending. I know it's wild, right? Like it's a bit confusing to me as well, because I think about that, because I'm like, the trend is your friend. These are my principles, but I think he's playing at his level. He's playing. We have to take some things into consideration. At his level of money and his longevity in the marketplace, I don't know how many years, over 20 years plus, he probably doesn't care about as much. So I'm pretty sure all his trades are like 6+ months in terms of perspective. So he might be playing at this level. It is downtrending, yes, but he's probably playing long leaps or something. We could go into the Rivian contracts and see what's the longest dated ones that are available. Actually, I could pull that up right now in the options chain. Let me see. Longest dated ones would be, because if he's playing leaps, it's only to a certain extent, right? December. Oh wow, 26. So it could go all the way up to 26, right? 2026 is the year. So he could be playing 2 years out. So in other words, we know that George Soros is bullish on this within the next 2 years, right? That's based off what we know. And he could be loading up on very cheap options here, in which case, when Tesla runs, which I think it will, because Tesla is not $1 trillion, and all of its peers are $1 trillion. Tesla's going to go really high, and when it does, this one's going to go really high as well, and he's going to pocket on that money. Now, if we actually go into George Soros and look at his performance, you might have a different view. So we go down here. Give you one second. Again, this is like top tier investment analysis that I don't see any other person on the internet really performing, right? So now we look at George Soros' portfolio, then you kind of have a different opinion, right? Look at this guy. From 2009, he's willing to go from 3 to 11, right? He's willing, I mean, at that point, you really don't care about the money, right? Like, look at his fluctuation. So his performance isn't as, like Bill Gates caliber. Bill Gates is on a whole nother level, right? So maybe not a great example. Like this is like very choppy. But again, I'm not gonna disrespect someone that's like really good. But based off what we know about George Soros is he makes all his money like in lump sum or not lump sum, but like in like just 1 year. So in other words, his fund curve is like volatility. He'll make all his money in one big year. I'm guessing, but I could be wrong. Bernard says, what if we were to look up the top 10 most successful investors, pick their two strongest stocks, and split portfolio over those 20 stocks? Give me the top investor. Give me the name of the top investor because top investor could be of like 2024 or 2000, Bill Gates, etc. Um, I'm trying to see. Let's actually dive in here because I'm actually curious. Like, there's many. Let's see, Guru Statistics. Uh, it's a little bit laggy because it's querying a lot of data. I'm trying to think here. All time, but hold on. List of gurus, guru statistics, scoreboard. It should be the scoreboard, but I think it's that one. Let me see. Aggregated portfolios. So scoreboard and top. Okay, now we have to apply time to this, right? You could say Bill Gates, but top fund top investor here, but like how long? The the most successful investor, but in the last 6 months, in the last 1 year, 5 years or 10 years. Pick one, Bernard. Which one are you looking for? Because now we could actually arrange and see who performed in the top. Let's say in the last year. Let's do last year. But if you have like 5 years, we do 5 years. So it looks like Frank Sands, right? Sands Capital Management. In the last 1 year, he did 52% performance wise. Now we go 10 years, it's probably Warren Buffett. Let's do 10 years. Ron Barron. Okay, Ron. Oh wow, Ron Barron. Actually, yeah, this guy, man, this guy's a beast. All right, let's look at his portfolio, right? Because in 10 years he did 20%, in 5 years he did 31%, right? And then in the last year he did 41%. So let's see what he's doing right. Bernard says doesn't matter. Just look at the biggest investor you know, Gates, etc. How wrong could you go by following their strategies? All right, that's true. This guy is 34 billion. Let's actually look at his equity curve. Let's go down, look at his equity curve. Yeah, he's pretty consistent with performing, right? From 2009, 11 billion to now 46 billion. So he is growing. He is growing his net worth. Now let's take a look at his portfolio, right? Let's see. Let's take a look in here, see how we're doing. Man, I'm really excited about the Bukowski techniques and stuff. Like, I think we could find really outperforming stocks. Um, like long-term perspective, yeah, I think it's pretty easy to find. So look, so Tesla's his biggest position right here. You already know, Bernard. You already know. Right? So Rivian is just a derivative bet of Tesla, if you think about it. So this strong player right here has almost 9% of his portfolio in this one. And then yeah, he's definitely like CoStar, FactSet. He probably uses FactSet quite a bit. That's interesting, right? Because like these guys are not only are they hyper connected, hyper wealthy, but they're in my eyes hyper information. Like if anything, this guy knows basically, you know, like he knows like the face of the earth like the back of his hand. Because he like at this point you're so equipped with like a net of entities, and that's really how you become wealthy, right? You got to own like a net, just like you build up your network to have business opportunities. You build up your assets in different entities, and you have like a network of entities. These it's basically what these guys have. But we can see his portfolio, right, where he's high, his high. I love how these older gentlemen are willing to bet high conviction, right? Let's take a look at Catherine Wood and see what's the update on her portfolio. Right? Let's see what she's been up to. Now, 11 billion, right? And oh, this one's a little bit outdated by a month, but let's go down and see her performance. So this is Kathy Wood right here. Look at this. Look at that, right? So started with like 270 million all the way, man, fundraising galore, 50 billion fundraised during the pandemic. She career peaked during her pandemic, right? And again, this is reflective of money printing, um, like her fame and everything, right? And then recent years has gone down. So she had 53 billion, and then probably outflows and losses down to 15 billion, right? Because if she's performing, why would her fund decline? So she probably didn't perform in the last couple of years. I understand, but we go in here, we look at her portfolio, right? Let's take a look at what's her biggest holding, because I'd be curious to know. Give me a second. It's a lot of data. We gotta respect the amount of data that's being pulled, because it's probably from several sources. Oh wow. Well, what do you know? She's also got a similar opinion over here, right? Now you know what we should do, Bernard. We should actually just focus on this one and open this one up. Her second biggest position is this one, right? And in this position, and we could go and look at these positions and see how she's playing. But we know her performance as well, right? So I think it was really Gates who is really impressive, Bill Gates. Um, let's look at Tesla and let's look at the ownership and see who is Elon Musk's boss, right? Because Elon Musk doesn't own the majority shares here. He's just the front man. Elon Musk and then Kimbo over here, but his boss is Vanguard and BlackRock, right? So that's who his boss is. Vanguard and BlackRock. That's probably what he thinks about all day. That's probably this is probably on his personal phone right here, who hits him up the most. Um, but yeah, very, very fascinating information here. I know we got about 10 minutes left, so you guys let me know if there's anything else you want to chit chat about. But this is, another learning session in the books here. Uh, uh, but I did, Bernard did kind of inspire me to look at some of the really good players out there. So this mutual fund's been performing, it looks like, the 53%. Harbor Capital Appreciation Fund. Let's see what have they been doing right. I'd be curious to know. Uh, Wait, why is Bernard saying yay? I I didn't follow that, but all right. Let's see. Oh wait, it didn't open up. This one, Harbor Capital Appreciation Fund, 27 billion. How about Bill Ackman's portfolio? Yeah, we can look at that one. You said I'm doing something right. Oh, okay. uh, let's look at. I do actually want to look at Bill Ackman. That would be very interesting. So let's take a look. Let it load. I just want to see how this one's performing. Disney, huh? Speaking of Bill Ackman, it reminded me of Nike and Starbucks. Starbucks is probably a long, right? So again, not investment advice, but I just want to look at this portfolio real quick. What's the weighting? Let me see what are they doing that's outperforming. So they're playing. I see. So they're playing pretty aggressive as well. Let me go down real quick and see the fund. This is a $27 billion fund. Let's go down right here and analyze like what is it that they're doing right? Because okay, they've been around for a while, it looks like. But they've also okay, so because of their growth exposure, they got hit in 2022. Everyone with growth exposure got hit in 2022, without a doubt. Um, Bill Ackman. Let's look at his portfolio, right? And we could go to let's look at his performance. So his portfolio is 10 billion, updated as of 8/14. Nike and Starbucks are both struggling, losing market share. Yeah, it's struggling. I was looking at it more from like who's accumulating. There's a catalyst on there's a corporate based strategy for Nike, no, Starbucks, because the new CEO from Chipotle. And so the Chipotle, when he was CEO of Chipotle, he took the stock ripping and roaring. So the logic is the markets remember that or will remember that, and we will see Starbucks rip and roar with that CEO as well. So that's the logic. So in other words, I think Starbucks is going to be, and the charts reflect it too. It might be the start of a big move, right? But environment matters as well. So you got to pay attention to environment. So this is Bill Ackman's portfolio. So you can see performance wise, 2 billion to as high as 10 billion at his peak 2015, 16 billion. I mean, at that point, like you got so much money that like honestly, like you're just like kind of babysitting money. You're babysitting money, and then people like Bernard's hitting you up saying like, "Hey, how's the portfolio going? Right? How's my investment going?" And you're just like you're eating Chipotle or whatever in your tower, right? His biggest position is this company right here. Interesting, very interesting. Um, let's look at Starbucks real quick, right? S Bucks. So Starbucks right here. What? Yeah. So again, the markets, right? Like this is beautiful right here. Um, I mean, what can we learn? I mean, this is messy at the same time. right? Can Bukowski come in here and help us out? Uh, from point to point, we could probably fit the most points somewhere right there, right? So we know there's a line right there. And from point to point, we also got another line right there, right? So we got sort of a symmetrical triangle right there happening. What else can we see, right? We know that volume was massively right here. So we know that this is a demand zone right here, right? So that's a demand zone. And then the next demand zone that we could see is right here. And that's the current demand zone that we're bouncing off of. So we know that that's the risk right there, right? And then it's approaching the 50 MA. So it's still in this wedge, and we really won't run until we clear this wedge right here, right? So ideally, it has to go something like this, and then once it goes out, then it starts to run. That's what I think is happening to Tesla right now. So we go over here real quick. Look at Tesla. All right, I think Tesla's going to be a big money maker, based off of like what I just saw with the funds holding Tesla. Again, not investment advice here, but that could be a potential big play. If I turn on my drawings, right? Check this out. Check this out. See the red line, Edward? Right there. Right. So it's just starting its reversal. There is overhead supply, but this one could be an exciting run, right? Once it goes to 400, it could rip up even higher. So that's what I'm seeing with Tesla. Now, what do we see here? All right. It's quite a bit, but this is the chart practice that, chart school. We should just call this investment club like chart school, but I mean, we like everything investing in here. You definitely have the left shoulder. You definitely have the head right here, and you definitely have the right shoulder right there, right? In which case, the theory is basically the amount of decline would be from the high 400 and then the low right here. So a $200 decline. That's the theory right there. If it were to go below, but I don't think the markets wants to take Tesla that low. Yeah, no, that's not going to happen. So then that doesn't work. Then we have this trend line right here, right? Which, I could better draw as well, or whichever. You could do the shadows, or you could do the body of the candle. Typically, the body is better, right? So if we do body to body, which would be like this body to this body, I know it's not perfect, this body, we're kind of outside of it, right? But a clean outside body would be above 200. I mean, I like it above 200. 250 would make it even better, but I think this one has the attention of the crowd, and I like this one, right? What else could we say about this? Can we, can we develop any new observations, right? Like if we, crunch the stock, if we crunch it, we obviously see the symmetrical triangle, right? I like to do that. Um, if we look at recent volume, right? Where's the volume activity? We know there's a massive whale right here. So this, if anything, this is the massive. Let me draw this. If anything, if you see the volume right there, this is the zone right here. We're literally in that zone, right? And yeah, I mean, 250 above, this thing flies. This thing is probably gonna fly, right? Above this high right here, it flies. Above 270, it flies. Because that's just how the other players are operating, right? I'm basing off of like how other players operate. So above 260, 270, it's gonna fly. Now you could play this 200-day moving average right here. You had like it's already flying right now, it's fractal, right? Fractal in nature. So in the near term, the weekly, it's already flying. It's above the 50-day moving average. Could continue further as well. But I think this one's a big watch, that we got to pay attention to, as well as Starbucks, because new leadership, right? I mean, I'm not. Look, I'll tell you this: new leadership works. Okay, you guys saw GE. So if you remember, they had the previous CEO. I gotta check if he's still there. The previous CEO stepped in somewhere over here, right? And that was the CEO of what? What was the CEO of? Uh, Danaher. He was this CEO, if I recall, right? He took this stock up, if I recall, and then he shifted over. So there's also the strategy of analyzing the CEO and their performance. right? If I recall, he's the CEO of GE. So we go back to GE and we saw the performance, and now we kind of know. So Starbucks has a really strong CEO in that same category of like retail food, right? So look at GE's performance is just I was impressed, really impressed. Look at that. So I think the same thing could happen to Starbucks, right? Because we're talking about like top tier CEOs getting into the right companies. Uh, just the same as SAP CEO when going over to ServiceNow. The CEO that wears sunglasses because he lost one of his eyes. Um, yeah, and look what he's doing to ServiceNow. He's taking this thing to the moon. So that is another powerful strategy to follow up on. Again, if we just do the basic work, guys, like we could find really good plays. Like you don't need to like do like extensive like analysis. You could just follow like the top tier CEOs and those stocks will perform. So yeah. It's 12 o'clock. Oh wow. This session today was fantastic. It went by quicker than I thought. But hopefully you guys enjoyed it. There's a lot of insightful information. At least I know I would overpay for such information. But I'm having a good time, and I think for the rest of my life I want to take. Well, I mean I don't know about the rest of my life, I guess, but I'm gonna take stuff like this to the next level. Great session. Learn from the winner. That means you. Hey, I try, but I want to really take the learning to the next level. So if you want to join me in the journey, then yeah, join. I'm talking every day in the Finviz school platform, so you could join us here as well. Um, but yeah, it's just train, 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 right? Train and use my baseline model of like what I've learned over the years, and then build from that. Or you could go build your own baseline model, and that's what they call it in data science, which will take a long time. But you come in here and you mold to my baseline model that I develop, and you could craft it whatever way you want, and bounce ideas with me, and that's how we get better, right? So it would definitely help if like we had more questions or disagreements like Bernard, where he's like, hey, hold on, I disagree with PayPal, and then we double click, and it forces us to look at the fundamentals, and then it forces us to open up the revenue and see how they make money. To let's see like are we basing it off of like logic or emotion or some other things? So it definitely helps a lot. Edward says low rank adaptation. Thanks. I'll fine tune on your pre-trained base model. Low rank adaptation. Hold on. What is low rank adaptation? That's hilarious what you just said. Uh, yeah, but that okay. So Edward, like LLMs taught me so much as well because I was just thinking like, wait, like all these startups, right? Eventually they're gonna, it's based off like pre-trained models, and the pre-trained model is just a really big large language model like Meta 3.1. So what if we could arbitrage value from multiple foundation models? You see what I mean? You see what I mean? Right? Arbitraging from different LLMs or foundation models, which is the same thing as arbitraging knowledge from um, different grandmasters, which we talked about before as well. Will the password change next week? I don't think so. I mean, I'll change it like occasionally, like ideally every 30 days. But Bernard, if it does change, the password is inside the Patreon. Um, I mean, you could always text me and I'll give you the password as well because I know you, right? So like, if it's too difficult, just message me. But yes, it's just simply in the Patreon. It's something I do have to kind of enforce because I do have dreams of like building up like a big investor community. So there's like people from around the internet that enjoys this type of content and they want to join and be part of the journey, right? But then like it's hard for me to structure it in a way where like there's folks who have free trial, and so it's like I'll be giving it to them for free, and I don't want to stay on free anymore, if that makes sense. So I apologize for in advance for any inconvenience. But if it's difficult for you, just let me know, and I'll get you the password or whichever. Because that again, I'm trying to build like a long-term community here as well. Because this community forces me to. So in other words, like the community is my passion, a reflection of my passion, and the need to serve it will serve my passion that again I defined in the beginning. That's just it's a beautiful business model that I like. And it makes the journey a lot less lonely when I'm just like sharing like genuinely like how I'm approaching things, how I'm failing, where I'm succeeding, et cetera, et cetera. So it's been like that since day one. Bernard says, thanks. It's fine if you post it before the meeting starts, ideally the day before. Yeah, 100%. If I were to change it, it will be changed like a week before. So as long as you log in, it will always be on the Patreon. That's where the password is, right? If I just like, let's say if I decide to change it next week, I will change it the Sunday night before. So don't worry about that one. Jan says, thank you, Kay. Amazing learnings today. Bukowski patterns are new to me. Excited to learn. Yeah, I was even thinking about doing weekday sessions on just like, hey, let's just actually review all of Bukowski's work because he spent 40 plus years figuring this out. Why don't we just study it together? And because someone has to lead the studying. It's like a book club, right? But in this case, it's an encyclopedia club because I have his two big books and they're really thick. Like if it dropped on someone, like someone would probably die. But it's like it's that much information. But I think it's just so helpful that we start applying his statistical analysis to all this and really elevate our trading, right? Because like you guys know me, like I got this expensive indicator right here, which basically, it shows the oh, all my windows are popping up and out. It shows like, it's just like how other players are watching the markets. And the more we mix and merge how different players are looking at it, we'll also find our own expression as an investor and our style. But then like but our style is built off of experience baseline models of other grandmasters, right? So like for example, like Bernard really likes how we look underneath like Bill Gates's portfolio or Kathy Wood, right? So he really likes looking at the bigger funds and how they think about it. And Bukowski, right? If you like Bukowski's method, he's really analyzing like the patterns and the statistical outcomes of the patterns and what could occur in the marketplace. I see the value in this because it helps you capture very specific scenarios in the marketplace. Or if we use like John Carter's simpler options over here and their indicators, it basically shows like how he goes about identifying stocks that will rip for like momentarily, right? And through the indicators, how they're programmed or coded, it basically shows like when their logic kicks in. So you can actually get into the minds by just understanding the algorithm, which is the code basically, or other techniques, right? There's so much to learn, and I know in here you're probably overwhelmed, but hey, it's better someone shows you like all the different ways to do it than maybe one way, right? I mean, someone could show you one way, and you just focus on that one way forever. That works too. You could definitely make money with that. Any plans for in-person event? You know what? Surprisingly, yes, there is actually a plan for an in-person event. So Milpitas Community Center. So 2 weeks from now, I'll be out of the country. I'll be traveling out, but when I come back, Daniel and I were thinking about doing the events at the Milpitas Community Center. Uh, like because we talked about it. He's like, hey, I'm willing to fork out $600 per session, and we get this large, gigantic room, which could fit upwards of like 150 to 300 people. Again, this is the picture of the facility, but I mean, of course, I'm not going to deck it out like that. But we'll probably do once a month. So it's going to cost Daniel like $600. But hey, we're going to have a gigantic party now because it's the biggest room that I could find so far. So it's funny, right? We went to like Cupertino for the rooms, and then now we're going back to Milpitas because it's a beautiful community center, lots of space, lots of it's lots of elderly people because there's also a senior center, but I think it's just going to make it a lot more fun. So we're planning to roll out those parties, networking parties, investor parties, people come and network. Man, I don't have a good picture of the facility, but let me see. So that's the plan so far. This is what it looks like. I think it's a great spot. It's gorgeous. It's beautiful, and if we run it once a month, then yeah, we all could meet in person, and it'll just make everything a lot more dynamic. Um, but yeah, so definitely plans. I walked into that facility and I was just like, wow, these seniors are having the time of their lives. Like this actually looks really fun because like there's a lot of them playing chess. There's a sports center and it looks really nice. You could walk out back. It's just really beautiful, right? With like sunny weather and everything, it just makes the vibe really nice. So I figure like, okay, yeah, we could throw parties there. Why not? It'd be fun because I'm getting kind of bored just kind of hanging out online. But this is something that it is online only, so It's better online, but hey, we'll see. We'll see where it goes. So that's coming in the works maybe next month when I come back from the country. Uh, what else? Other questions here. I definitely got more value from these sessions, so thank you for putting in the time and work. Hey, you're welcome, V. We're putting in the work together. But all right, guys. If there's no other questions, Liz says thank you for sharing and broadening my knowledge. Have a great week. Hey, you too, Liz. We're gonna do a lot more. I'm gonna share a lot more because I'm actually pushing more at this point. So I'll catch you folks next week. All right, everybody. I'm gonna power off now, so let me start pushing those the right buttons.